I want to talk a bit about Hovnanian now. We told you about the company's report for the quarter. It was a bigger than expected loss for the second quarter, with profits down more than tenfold from last year. And it's actually, the loss was 10 times bigger than it was last year, would be the way to say it. The U.S. home builder did say, though, that it wants to be cash flow positive for the full fiscal year. Let's take a look at shares of HOV. They're down almost 8% on the day, up 8% so far this year, though. So joining us on the phone for a CNBC exclusive, Ara Hovnanian, President and CEO of Hovnanian Enterprises. Hey, Ara, been a while. How you doing?
I'm doing fine, thanks.
All right, so how should we look at this? Should we focus on the cash flow positive for the year, or should we focus on a loss that was 10 times bigger than a year ago?
No, absolutely. Look, the housing environment is difficult. All public builders are having challenges reporting profits. The focus is on liquidity. It's on cash flow, both for our company and for the industry. It's a challenging time, and we just have to weather through it.
All right, so we always ask you this. This is the tough question. But the thing is, where are we in terms of improvement? You know, yesterday, Kerry Sanders from NBC had an interesting report, Ara. He said, we're starting to see a 41% increase in sales of existing homes in certain areas of Florida, which would maybe indicate vultures were coming in. We were seeing things get better. Is it too big to call that a trend, or too early to call that a trend?
You know, it always starts with little anecdotes and little pockets of good news, and we even have little pockets in locations where we're actually raising prices. Unfortunately, they're absolutely the exception rather than the trend, but there are a few positive things, a few glimmers of hope that give you encouragement. For example, our cancellation rate, this quarter we reported at 29%. Last quarter it was 38%. The quarter before that was 40%. So it's clearly trending down, getting back to normal levels. Existing home inventories leveling off. It's not improving yet, which we really need, but it's not getting worse, which it was for a long, long time. And new home inventory is fairly in control and has been coming down among all the public home builders.
All right, can I ask you about these pockets? I know you said, unfortunately, they're the exception, definitely not the rule, but where are you raising prices right now?
We're actually seeing in a few locations in New Jersey that we're able to raise prices. There's a location or two, hard as it may be to believe, in California, and certainly in Houston we've been able to raise prices. But again, I'm giving you a few anecdotes. I wouldn't run out and pop the champagne cork yet. We have 400 different locations around the country, so this is just a few handful.
All right, interesting, though, that you had one of them in the state of California, which surprised a lot of people. All right, that cancellation rate, you talked about how it came down from 40% down to a current 29%. What is normal? I mean, not the bubble era.
Low 20s, 22%, 23% is normal.
All right, so you're pretty close.
We're getting there. We're trending there. Now, it's still, again, not reason to pop champagne corks, because you need gross sales as well, and they're clearly down. But it's just one more piece of evidence that we're slowly correcting in the marketplace. New supply is clearly coming down because the starts are down dramatically. We're down to slightly less than 1 million housing starts nationally. That has historically been the level of the trough of every housing correction. That's another good sign, because it means we're not producing as much new housing. It allows the existing homes, new and old homes, to burn through the inventory.
Do you care if the Fed raises interest rates this year? I mean, would it matter to your outlook at all if they came up quarter point, half a point more?
You know, our business is most importantly driven by long-term rates, and that's unlikely to get affected at this moment, whether the Fed lowers a little bit, or stays the same, or raises a little bit. And I suppose if they raised it and the signal was that this will help inflation, that might help long-term rates. More important right now is that Congress passes this housing stimulus bill. There's a version that passed the Senate. There's a version that passed the House recently. They are in joint committee right now. I think that could be an absolute momentum turner. If that passes, particularly the home purchaser tax credit, that could absolutely turn this market around, just as a similar legislation and tax credit did back in 1975 in the last major housing correction.
All right, Ara, thank you. Good to talk to you.
Okay, thank you so much.